earn more money but too busy to start a side hustle? Do it the right way and teach your money to make more money for yourself, even when you're asleep. Dale Corpus will show you just how here on the School of Cash Flow. With his entrepreneurial mindset and extensive experience in real estate and finance, Dale will help you become a responsible, strategic, and passionate passive real estate investor. Learn how you can increase your earnings or find more ways to make money, only here on the School of Cash Flow.
So good afternoon and welcome everybody to the School of Cash Flow podcast. I'm the host, Dale Corpus. So real estate is a team sport. So relationships will, get you far in this business, which is why I'm constantly networking and open to meeting new people. One of my previous real estate sales coaches told me that, or he had a saying that said, you're just one relationship away from your business exploding. And that really resonated with me like no other. You never know who you're going to meet next and how you can help them and vice versa. So it's one of those things I love about real estate. It's all about the relationships made and friendships made that could be long lasting. Anyway, my guest today was connected to me through a business partner of mine named Elizabeth. And he has a similar background to me in that he's originally from the Bay Area. And he was a realtor. As you guys know, I'm still a realtor right now. My guest happens to still be in real estate, but his focus is more so solely on the investing side of real estate, and his niche is multifamily real estate. So his name is Justin Moy, and a little bit more about him. He's a partner at Perpetual Wealth Capital, which focuses on multifamily passive investments. And before becoming involved with multifamily investing, Justin was a top broker at the third most competitive residential real estate market in the country, here in the Bay Area, actually, winning numerous awards for production. And during this time, Justin specialized in helping investors acquire long-term projects that would provide favorable cash flow and appreciation. So welcome to the show, Justin. How are you?
Dale, I'm doing great, man. Thank you so much for the introduction. Really flattering. And thanks. I'm excited to be here.
All right, that's awesome. Obviously, I mentioned from your bio that you're from the Bay Area originally. So for my audience that doesn't know you, where are you based out now geographically?
Yeah, I actually moved out to Arizona. So to give you a little bit of a quick background, I didn't have too much of a conventional path. In high school, hated school, looked for any reason to get out of it. My parents at the time, of course, told me, hey, you got to go to college. We never went to college, and we have certain struggles that we want you to avoid. And so I started thinking to myself, how can I avoid college? And the answer was, well, I'll go into the military. And so I actually went into the military. I was in the Marine Corps for a few years, got out as soon as I can, because if you ever thought that you hated school, you'll probably hate the military more. And so got out of there as I could and came back and was sitting in San Ramon, where you live, right? And that's where, I had met up with some of our associates, and thought to myself, what can I do to avoid going to college? And I knew I was always really good at sales. So I thought, well, I'm either going to be an insurance broker or a real estate broker. Looked into the two. Real estate excited me more. So did real estate sales for a couple of years there in San Ramon. Really got bogged down with the thought of living there my whole life. I really wanted to travel a little bit more. And so I thought it's a now and never moment. So about 6 years ago, I decided I'm going to give college another run. So I'm going to go, it's now or never. So I went to the University of Arizona. That was maybe about 6 or 7 years ago now. And I've been in Arizona ever since. And now I live in Scottsdale, doing what I love in multifamily real estate.
Okay. Do you miss the Bay Area out of curiosity?
I visited and we're recording this, first week of December. So I was just back there for Thanksgiving, and I was sitting in traffic thinking to myself, no, I don't think I do. It's got its pros and cons. It's just a different lifestyle. It's, like I said, I spend more of my time sitting in traffic than I would like. And so, I don't think I see myself going back, at least long term, but I have family there. So of course I'm back there, semi-frequently.
And I know that Elizabeth Lee, who's one of my real estate, business partners, over at, we're this real estate brokerage and we're on the same team. Like, how did you meet her again? It's like, we're talking about relationships and connections. And I know that she randomly, she said that I should chat with you, and that's how we're here today. But like, how did you even meet her?
It was such a long time ago. And I was just like you, relationships, you're one relationship away from the next thing. And when you are young and hustling in real estate, at the time I was 20 years old.
Mm-hmm.
The Bay Area markets are extraordinarily competitive. I mean, there's generations of realtors, of family brokers that live there and dominate there. And so I was networking every chance I could. I mean, I don't think there was a single day that I was home before maybe 8 or 9 p.m. just because there were after hours events that I'd go to. And so one of those, probably like meetup.com. I'm a big fan of meetup.com, just talking about real estate. And Elizabeth and I just so happened to link on LinkedIn, and she saw a couple of things that I was posting, and then we got reconnected.
Okay, love it. Yeah, it's just like, again, constantly meeting people is like the way to go. It's just, you never know who you're going to meet next. What I wanted to, ask you then is, like, did you transition from being a realtor to obviously moving over to being more on an investing side? Can I ask you, like, what was the main reasons for doing something like that? I mean, do you miss I know you love selling. I know you're good at that, but what made you do that transition?
Yeah, absolutely. So I really was good at helping investors purchase single family homes and condos. And I would, of course, do those by crunching their numbers. And eventually I would start to see, man, they're making really good money here if they're able to execute these. And when I would follow up with them, they were usually actually outperforming what we thought they would be getting. And so the mixture of seeing what they made, being an owner and an investor, and also not being transactional as much. In real estate, you're always hustling, you're always chasing that deal. One thing that really stressed me out about the business was I could never be gone from my phone. Never. Because I always thought to myself, oh, what if I'm missing the call, the come list me call, or every weekend, it was kind of grinding on some relationships that I had, because I'm just a workaholic and I'll allow myself to just dive in as much as I can.
Mm-hmm.
And I thought to myself, I need something that's not going to be as transactional, where I can take a vacation and feel like I'm not going to miss out on the next $1 million deal, which will be my, a significant check. So brought me into thinking that I was going to pursue that, right? I'll buy a couple single family homes. I'll buy one a year. And just, in 20, 30 years, I'll retire from doing that. And then, like most people who wind up in the multifamily space, thought to myself, well, that scale honestly kind of sucks. I have to spend a long time purchasing properties. And then, led me down the rabbit hole of multifamily. And I just haven't looked back. Multifamily has solved every problem that I've been looking to solve, and really has a scale and really fits my personality and my strategy.
Well, I love it. It's like, I see a lot of similarities of myself and you. Obviously, I'm still in real estate, but funny thing is, I consider myself more of a real estate entrepreneur than I am a realtor.
Yeah.
You don't get rich in real estate. You get rich by owning real estate, but I like, both. I mean, real estate sales is very social for me. I have a good, a huge referral based business. And now it's like, it's one of those things. It's just like, this podcast is a great platform though, too, to get people chatting about thinking about buying real estate and just real estate investing in general, since everybody in the Bay Area is so tech focused and they have so much tech stock. Some people are now thinking about diversifying into, things that you're doing or things that I'm doing, because I've been heavily involved in real estate investing via syndications, not so much multifamily, more so self-storage, mobile home parks and whatnot. But it's just, no, it's great that you're doing that, what you're doing. I wanted to also just go back to, you're getting into multifamily. Did you, when you first got into real estate investing, did you go straight to multifamily, or like, I wanted to ask you, what was your first real estate investment?
What's interesting is yeah, I went straight to multifamily.
Oh, did you?
I did not own any. And here's another thing about me is, when I was, like I said, maybe 7 years ago or so in real estate, the market was so on fire. It was so crazy hot. Every guru, every person, every broker in the office was telling me, oh, this is the top. Don't buy anything now. Just wait a year and it'll go down. Waited a year, it didn't go down. Waited another year, it didn't go down. Then I was in college, and then, I was out of that game because I was renting from apartment to apartment. And now, over the past few years, still hasn't gone down. So I really did kind of let that fear prevent me from getting into the game sooner. I mean, I should have dove in. I let other people kind of get in my ear and just tell me, oh, the crash is coming, so don't get in anything. And then when my life changed and I was moving around more for college and things like that, of course, it didn't make sense to really buy something for me. But no, my first real estate purchase is actually a 41 unit property. And now I'm actually buying my first single family home, which is also an investment property with my sister and my father back in the Bay Area. Actually, it's in San Leandro. It's a family friend selling the property. So no purchasing besides those two properties as of now for me.
I love it. So correct. So your first real estate purchase then was an investment property versus your own primary residence. Is that right?
It is. That's right.
Reverse.
That's right. I mean, I live in an apartment now and I absolutely love it. There's a social thing about it too, right? I mean, depending on where your personality is, you fit, but also, moving is on my horizon here in the next couple of months. As you know, my girlfriend finishes up some things here, then we're looking to actually move either to Kansas City or to Boise before we purchase some things. But I don't know many people who go straight into 41 unit purchase to the first one, but it's been an exciting journey for me.
Yeah, some people might think it's crazy, but I guess it depends on who you hang out with.
Yeah, absolutely. And that's so big too. Like you said, always networking, and whoever you surround yourself with is going to set your expectations. So if you surround yourself with people who say, "Oh, that's crazy," you could never do something like that. Well, then you're going to start to believe it. Just like I believe people who told me don't buy anything now because things are crashing. Now, my circle is very aggressive and just, hey, build your portfolio. Don't wait to buy real estate and wait.
Yep.
So that is definitely, I totally agree. Whoever you hang out with is going to set your expectations for what's extreme and what's ordinary.
Let's talk about Perpetual Wealth Capital. Tell me about it. I mean, how did you come up with the name Perpetual Wealth Capital?
Yeah, I mean, perpetual means forever. And when you think of wealth also, wealth does not just mean rich. Wealth means something that is in such abundance that it can't be destroyed. Mm-hmm. And what we really like about our properties is really creating that long-term wealth, that long-term cash flow. And we syndicate apartments, and a lot of people who syndicate, you're looking at a couple of years as a hold. And then really, in my opinion, what they're doing is flipping it, because they're buying properties that maybe need rehab, they're rehabbing them, and then they're getting out of them in a year or two. And their investors aren't really getting paid through cash flow. They're getting paid, if you invest, let's call it $50,000 in 2022, you're going to get maybe a couple $1,000 for the next 2 years, but big payout when we sell the property. And we've looked at deals like that, but we don't prefer them. We like deals that we can buy and really hold on to, and really, perpetual means forever. Give that cash flow so that we're not constantly on a wheelhouse of looking for the next deal. We're constantly growing, but we want us and our investors to start getting comfortable with cash flow, and really, expansion as being something that's good for us to do, but not necessary, because we're not constantly flipping into apartments and looking for the next deal. But we have cash flow coming in. So we really like those plays.
Got it. So for your syndications, then a lot of syndications for multifamily, they say, 5-7 years or whatever is the expected time frame to unwind out of that investment. Is yours have a longer timeline then, or tell me about that?
Yeah, it again, we're flexible on what we look at, because we find a really good deal that has different strategies, we're gonna execute on it. But yeah, we like a liquidation event between the 5, maybe the 3 and 7 year mark, depending on what it is. Typically in a refinance to return capital and then hold on to the asset. That's the first exit that we look at,
right.
And that we feel is the safest and the best for the lifestyle that we have and that we want our investors to have. So yeah, ideally, we would look at a property that does have that value add, so that we can push the valuation up over the next 3 to maybe even 6 years, refinance the money, give it back to the investors, and now we have that perpetual return, that cash flow coming in.
Okay, yeah, that does make sense. In terms of size of multifamily properties, what does your company focus on? Is it, a certain, number of units, or what are you looking for?
Absolutely. So, we're in a big growth stage right now. And going back to what you said, hey, it depends on who you surround yourself with.
Yeah.
So before, when I first started this, I was looking at, hey, we want between 20 and 40 units, right? That kind of seems, quote unquote, appropriate for us. And when we're starting out and we're going to compete with different buyers in those markets. And now we've closed, like I said, the 41 unit property out in St. Louis County. And the circle that I closed that property with is thinking much, much bigger. So now we're actually pursuing, into the 10 to $25 million range. Ideally 100 units or more, but we've been looking at deals that are 50 units, some distressed assets below 50 units, but mostly 50 units or plus, capped out at about, 15 to $25 million purchase price. That's what we really like.
I'd love to hear about that, the most recent deal that you just did and whatnot. So like, tell me about that. Like, how did you even source that deal?
Yeah, absolutely. So I took a lot of what I learned from real estate sales, actually, which if you want to be the top producer, Dale, I'll ask you, if somebody wants to make a lot of money as a real estate salesperson, what should they do?
Prospect, put your name out there, networking. Yeah.
They should prospect like hell.
Right.
I mean, I knew a lot of people in the business that were definitely not smarter than me, not to knock them, but they were just, not as into the game as I was, but they were making a lot more money than me because they would just out prospect me like crazy. Right. So in this business, in multifamily, most properties are sold with a broker, a commercial broker. Now, I essentially treat those brokers as the people that I prospect. Right. And so I make connections with them through any, LoopNet, or if I see them, I'll just Google, hey, multifamily real estate broker in, whatever city you're looking at. And then once I get your name, email, and phone number, you're in my CRM and you're in my circle forever. And so I have regular calls and follow-ups, depending on how our conversations go. And I just stay in front of brokers all the time. And I don't ever let them think to themselves at some point that I'm not active in the area. And so I'm constantly calling, constantly emailing, sending them texts. Earlier today, I actually had a big call block for 2.5 hours where I was just tearing through, calling all the brokers, reintroducing myself, letting them know I'm coming into the city. Do they have anything I could tour? So staying in front of the brokers are huge. Now, this deal, we bought it off market. We were the only buyers that were in on it, which is great for us. In this market, things are absolutely crazy. So things get outbid really quickly, but it came directly to us. You could say that I was lucky and called the right broker at the right time, but the best way to be lucky and to be at the right place at the right time is to always be there. So, I was calling this broker for the past few months, following up, constantly asking him if he had certain things that fit our criteria. He finally got something that did and brought it to us, and we ended up closing on the deal.
You had said it before, but I can't remember. What city is it in again?
This is in St. Louis County.
Okay,
so St. Louis has a city, and then outside of the city is more of the county. The county is a little bit more landlord friendly. So it's in a community called Spanish Lake up there.
Got it. Is this also, but it's in the, because obviously I'm from California. I don't even know where this county is. This is in Arizona?
No, St. Louis, Missouri.
Okay, got it. So question for you, since it's even outside your area, like how did you find, for example, even the property manager to even kind of manage everything? Because it's not even local to you.
It's not. And I live in like I said, the Phoenix area, where if you like what we like, which is cash and that perpetual return, I don't know many people here that are looking that. But so I looked out and we do a lot of our business in Kansas City, St. Louis areas, Oklahoma City. Now we're looking into Wichita, some growing places in Missouri and Kansas and Oklahoma. And so I found the property managers in almost the same way that I would even find one here. I Googled them. I called around every broker I talked to. I said, hey, by the way, we're looking to make a change for property manager. Who's your recommendation? We're looking at properties at this size. And I just kept a note on whose name kept coming up. And once I got that pattern, I just called, introduced myself. And then again, same with the brokers. I constantly call the property managers and stay in front of them. Ask them, hey, do you have any owners that are looking to sell? Do you have any owners that are looking to sell? We'll keep you on the property. Just bring them to us. So, I did a lot of research. And the thing with multifamily as well is once you get those bigger properties, you can have some very, very on point property managers because the scale is there. So much more comfortable leaving a larger property to be managed remotely by us than maybe even a single family home, just because the caliber of property managers for multifamily, especially at these sizes, is a lot more locked on.
Okay. So what kind of metrics are you looking at to determine that a certain area is something viable for a, good investment
Yeah.
for these multifamily investments?
The top thing we look at is growth, right? And there's two things that you look at. And there's actually, I did an episode on them on my podcast, Building Passive Income and Wealth Through Real Estate. But the two biggest that most people are going to look at is going to be population growth and job growth, which you're going to think are going to go hand in hand, but sometimes you get some conflicting reports. If you want to learn a deeper dive about it, check out the episode on my podcast. But we really like to see job growth. The numbers are reported more accurately. It'll also give us a better sense of what kind of people are moving there. If they're high income, low income, there's a good mix. So we like to see that job growth. We also just like to see, hey, is it a city that is reputable and has lots of tenant bases? Kansas City is a huge city. St. Louis is a huge city in MSA. You can get vastly different tenant bases from block to block. So we want to make sure that we're in those good areas, that you're going to get good quality tenants, but there's actually growth in those areas and people are moving there, and not just moving there, but people are getting work there.
Okay, that makes sense. So in terms for this property, when you were doing your due diligence and whatnot, how did you determine that the property itself was a good deal for yourself?
Yeah, absolutely. So we handle due diligence in a sense that first we look at the area before we even look at the property. Now, the area of Spanish Lake, and it actually brought me a huge amount of comfort because our property manager lives in that area, has about 1,000 units in that area or the neighborhood that's right next to it. And really, and he even grew up there in the neighborhood over called Blackjack. And he had even said, hey, yep, when I grew up there and I was born, it was rough. Over the past 10 years, it's gotten so much better that now that's a great place to be. Mm-hmm. So we knew we wanted to be in that area. Next thing is we were looking at, hey, where are the largest employers in this either the city or the MSA? This property happens to be within 20 minutes at the most of drive within the top 5 largest employers in the MSA. It's also really close to public services like parks and libraries, and a firehouse is right on the corner over from it. So we really liked the location. We knew it was turning around in a big way. And we're really excited to take the property over and continue managing it. It has a lot of signals that we're going to have an easy time filling it with great quality tenants.
Got it. How big was the raise? This was a syndication, I take it, right? How big of a raise did you do for this?
This was a syndication. Now, we actually bought the property distressed. Mm-hmm. So we bought it, purchase price was a little bit over $1 million, but there was about $500,000 CapEx budget for it. So we call it 1.5 million. I mean, mm-hmm. With that, we actually raised more than we feel that we will need, but we raised $600,000 for it because we also wanted a reserve budget for it. And we got a really awesome rate for the bridge loan to really get the property going. So we raised, it took us about $500,000 to close, but then we raised an additional $100,000 above our typical reserve, which we do $1,000 per door. So $41,000. We raised an additional $100,000 just as that backup reserve as well.
Very cool. Are you working on any other properties in the pipeline right now that for future syndications already?
Absolutely. I mean, we're always, again, prospecting, right? We're always prospecting. Best and finals are coming up for a couple of properties. We're submitting LOIs like crazy. Market's hot and everybody knows that. And every operator you talk to is going to tell you, hey, we're submitting more LOIs just to get a transaction now than we were last year. And then more that year than the year before. So we're just getting aggressive, not too aggressive. We like to stick to our guns with our underwriting, but just by prospecting out of brokers and property managers, really giving us every opportunity we can to continue submitting LOIs. So yeah, the pipeline's full. And again, just like what does that successful realtor need to do? You got to keep the pipeline full. Never stop prospecting. So never stop looking for deals.
Okay. Now it sounds like a lot of the skills that you had being a realtor translated very well into, obviously being over in the syndication, multifamily real estate space and whatnot. I mean, I'm curious, is there anything that surprised you about being in this space that you're in right now that, I don't know, that you didn't expect, or any challenges that you weren't expecting, or talk about that?
Yeah, I would say, commercial real estate has a significantly higher barrier to entry. And I knew that going in. And one of the things that's a huge, huge, huge difference is how you interact with brokers with it. So single family home brokers, I don't think there's a single one anywhere in the country that if I left a voicemail and said, hey, I'm looking to purchase something, can you give me a call back? They're excited to talk with you. They're happy. Oh, good, we got another potential client here. Commercial, it's really not like that. It's an extraordinarily high barrier to entry. It's kind of that a cycle, right? Because you need to be established in the market to get a reputable broker's time and energy, but you can't get established in the market until you have their time and energy to get you deals. So it's one of those things. You have to align yourself with great people, ideally in the markets that you're looking to be into, and you have to just keep at it. So much, much, much higher barriers to entry to start, and then also much more team focused. I mean, you can invest in single family homes all day by yourself. You can also sell single family homes all day by yourself. Commercial, I don't know of anybody who does it all by themselves. Yeah. They always have a team or employees or partners, even brokers have teams, and it's not like the single family where it's my listing. Yep. Even though I belong to an office, right? It's more like, hey, this is the office listing. I'm the lead broker on it though. What can I do for you? Yep. So a lot of those differences shocked me, that it was just different from the single family space.
Yep. I was going to actually ask you about team. Like, let's talk about that next. Who's in your team? Like, what are the crucial players? Who are the crucial players in your team? What kind of roles do they play that help you, make everything happen?
Yeah, absolutely. So I'm going to tell you, what I have and then what the goal is in the future. So what I have now is I have a mentor who I really, really enjoy working with. He partners with me on deals. He has that guidance. He's been in this business for, it's got to be close to 20 years now, maybe a little over 18 years. And so he has an official mentor role. He's my coach. I pay him. I also bring him onto deals, which I think is really important. It's awesome to get mentors. It's awesome if you can get somebody to do it for free, but really you're not going to, when you're starting out in this business, nothing is going to match up paying somebody. It almost doesn't matter what they charge. A lot of people, be transparent, charge between $30,000 and $50,000. If you want to get in this business, it's worth it. 100%. Find a way to pay it. So having that coach or mentor, big, 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 and really key. The next is I have a partner who has multifamily development experience and access to tons and tons of investors. So I bring on my own investors. I even have my podcast where I bring on a lot of investors. I get a lot of people and investor calls from, but closing this deal with him on the team immediately brought us scale. His investors loved the deal. They said, well, how can we do more of these? We do developments now. Developments don't have cash flow. They have a couple of years till we get a return. How can we supplement our portfolio with in-place cash flow and then continue to build that long-term wealth? And so that gave me a lot of access to a lot of really reputable and reliable capital fast so we could scale our properties. Now, in your business, if you're looking to get into multifamily syndication or any kind of syndication, I guess you could syndicate industrial if you'd like, or office space if you'd like. The two big roles, you're going to think somebody's got to find the deals and underwrite them, and somebody's got to bring cash. Again, it's really hard to do both. You can, I know people who do, but they don't have the scale of somebody who has at least those two, and then maybe some supporting roles on those teams as well. So if you can have somebody on your team that can find deals and underwrite deals well, then have somebody on your team who can raise capital for you, or raise capital for the deals. That's going to put you in a big position of success.
Got it. What's your personal outlook on the multifamily space? I mean, perhaps over the next 5-10 years, how do you feel about it?
Yeah, I feel, there's a lot of, like I said before, people saying, hey, we're at the top. The cycles go every 10 years. This is, the mark for it. Nobody knows what's going to happen in the future, but here's my gut instinct. Here's what I feel. When you invest for long-term cash flow, you're going to be okay, right? When people have those properties that do have those maybe 3 to 5 year exits, and that's the exit, like your cash flow at that exit point is not really favorable for you to keep the property, so you're almost forcing a sale. That's when you have a little bit more exposure than we like to have. What we like to look at is, hey, if we are going to sell this in 5 or 7 years or 10 years, what's our cash flow going to be at that point? So if the market's not where we want it to be, we can hold it. Are your investors going to be upset if we're not able to sell the property, but they're getting 10, 11, 12% cash on cash, and then we will sell in the future? No, they're going to be totally understanding that. So I think if you invest for cash flow, you're going to be in a lot better peace of mind. I also think of logics of supply and demand. People say, well, prices cannot afford to keep going up or keep going up. Well, demand will. People are not stopping to have children. These cities are not stopping to grow. Jobs are continuously moving here, and land is not, they're not making any more of it. So think of supply and demand of where you're buying, and you're going to be in a lot better spot as well. Even, I read something the other day that said even in the Great Depression, prices didn't really fluctuate more than at 18% at the most, which is great, which is why we have the new down payment standards that we have, so you're not underwater. So also thinking of how much leverage you're using. If you're going in 20, 25%, you should be able to weather those storms, because that's from what we see from the Great Depression. That's more than you need to not be underwater. So I see the demand to continue to go up. Affordable housing is going to be a big thing that governments are going to look for investors to help them solve. So getting into the affordable housing space, the voucher space, mobile home parks, I think should be bigger. There's a couple reasons why they're not. A lot of them have to do with social kind of viewpoints of them, or cities not really wanting them there. But that's something that's on the horizon too. So housing will not go away. So I take a lot of comfort in that.
Got it. Hey, I know you're always looking for investors too, and whatnot. I take it the type of investors you're looking for are only accredited investors, correct?
I don't. We don't restrict it to accredited investors. So to have an accredited status, the reason why a lot of syndicators will do that is so they can advertise the property and bring on more investors. So you don't need to be accredited to work with us. So far, our properties have not been exclusive for that. You technically should be a sophisticated investor. It's a little bit of a loose term, but if you have knowledge of real estate, you have at least some investments anywhere, even in the stock markets, and you're just not at least, have money that you're just, putting somewhere because you don't know what else to do with it. We'd love to work with you. You don't need to be accredited, and I can walk you through every step of it. You can even go to our website. I'll give you a website to put in the link as well, but it's thedefinitive.guidebook.com. And we have a free ebook, the definitive guide to building generational wealth and passive cash flow through multifamily real estate that has some more information on that as well.
Okay, got you. And then how did you did mention the mentor that you're working with right now, but was that the same mentor, or is that how you propelled or did that transition from being a realtor to getting into the syndication, multifamily space? Or were there other mentors along the way that helped you do this? I'm just trying to understand your education and of how that progression works.
Yeah, the mentor definitely came after I decided I was going to go both feet into multifamily. And it was something, and I did meet the mentor through a program. I was looking up, mentorship programs. And I knew that coaching and consulting was something that I really, really valued. And that was always something really important to me. So I knew once I decided, I put the last book down that I read and I listened to the podcast, and I finally said, this is what I'm going to do. I'm going to jump in both feet. And that's where really most of my multifamily education came from before then. It was just podcasts and books, just like most other people, right? All the free stuff that I could do. I watched YouTube videos. And then when I decided it's time to jump in, I looked up a couple of programs that had mentorship programs, private coaching programs, interviewed a few, talked to a few of the coaches and mentors, and really settled on this guy. His name is David, and he's awesome. He's been great ever since.
Yeah. In terms of folks that are, newer to the idea of real estate investing, I have a lot of folks that are listening that are, I'm obviously in the Bay Area. Most people here are in tech, heavily invested in tech stock and all that stuff. Wow. For folks that are on the fence about investing in real estate, that are thinking about doing it, any advice that you would give to them about, starting their investing journey?
Yeah, absolutely. If you have the stocks and that's what you like and that's where you're comfortable with, that's great. There's a lot of things that real estate offers that the stock market just didn't offer me. And even my portfolio, I actually ended up liquidating my portfolio to put it into real estate. If you are nervous about that first time investment, which is natural, you got to align yourself with great operators. If you're going to do it passively through a syndication like us, we're the ones that are doing a lot of that heavy lifting. You don't really need to have a ton of knowledge about real estate, but it's a great way to get your feet wet. Also, usually for less than it would cost for you to buy a property yourself outright, even a single family home, especially in the Bay Area. But there's lots of ways to get started. Educate yourself a lot until you're comfortable. If you have questions, I mean, even there's a lot of free resources, Bigger Pockets. I learned a lot from Bigger Pockets. I was just posting there. Sometimes I'll post, looking back, I'm like, wow, that was a really simple question, but somebody just answering it for me confirmed what I thought or believed in, and it made me feel a lot more comfortable. Again, I really like the saying, don't wait to buy real estate, buy real estate and wait. The market's been climbing and climbing and climbing. And, the growth as your portfolio growth as a real estate investor tends to be exponential, not linear. So that's something that I really like as well. If you're nervous, you don't know really where to start, like I said, head to my website, check out some free ebooks. There's tons of free downloads out there. Listen to podcasts like this one, where there's a lot of guests who talk about their experience. Pick up some books if you're more of a book person, or even just watch YouTube channels, subscribe to some YouTube channels, figure out whatever is holding you back and look for an answer as to, what is the realistic, pros and cons to the situation that you're looking at.
Got it. No, very sound advice. Out of curiosity for myself, to learn more about you too, is like, besides multifamily, are there any other types of real estate asset classes that you also look at, or is it pretty much only multifamily?
Yeah, for now, it's only multifamily. Eventually, I would like to get into, like I said, things that I think we really need. I mean, mobile home parks being one of them, a big one. There's also, we haven't dug into this yet, but I like the saying, when your competition zigs, you zag. Mm-hmm. Right. So don't lean into where everybody's at. That's why I don't invest in Phoenix, right, or Texas, because that's where everybody is. A lot of people bailed on retail and office space because of the pandemic. They saw how resilient multifamily was, how it performed, continued to outperform projections. So they all flooded multifamily. Now, I'm still in multifamily, but if you're willing to zig when others are zagging, there's going to be a lot of opportunity in office space and retail where they've lost key investors that are looking in those spaces. And, I don't think that those industries will die off. They'll shrink, but they're still going to be there. So for now, it's only multifamily for us. The next closest horizon for me is most likely going to be mobile home parks. Like I said, it's the affordability that I think the country needs. But don't be afraid to look out there and look at some office space or some retail space. Look for opportunities. Like you said before, don't be a real estate agent. Just be a real estate entrepreneur. Be an investor. Look for the opportunities where you can make money. Don't get so narrowly focused on one thing that you lose sight of other things. But yeah, for now, our portfolio is going to be all multifamily.
Awesome. Some final questions for you. So what are you excited about in your business right now?
Yeah, I'm excited to continue growing, continue helping people achieve financial freedom. The reason why I'm so passionate about bringing investors on board and even the reason why led me to creating my podcast I mentioned earlier, I truly, honestly, in the bottom of my heart, feel that if people really understood the benefits of passively investing in syndications, I don't think there would be a single person on the planet that didn't do it. I really don't. So to me, really getting that message out there, my parents, I'm telling them, hey, you got to put money here. You got to put money here. Get out of that 401k. I mean, it's not doing you any good. My real passion is coaching and educating people. And it just so happens that I do that through real estate. I think people need to break that cycle of not being financially free, of stuffing their money in a 401k and hope that they live old enough to bring their money out, and then hope that they, again, don't outlive their money. I think that's crazy. And I think that's a huge thing that we need to break as a society. So I am really excited about truly impacting my investors' lives and getting them into financial freedom and opening their eyes that, wow, this is a way better solution than what we've typically been pitched, usually by, our parents or past generations.
No, I just love how passionate that you are about, everything you're talking about. I'm like, which leads to my next question is like, what's your big why of why why you're doing all this and why you're hustling so much?
Yeah, absolutely. Hey, on an aspect, right? I don't want to live that same life that I'm helping people avoid. I don't want to grind on that 9 to 5 forever and then do it for 40 years and then retire when I'm however old the age is going to be in 40 years. So the goalpost is always moving. So yeah, I want to create a life that I feel people should have. And once I really have that life, I want to continue educating. I love the podcasting space. I don't know if I'll ever stop. I love meeting people, and I love, hearing the reach that I get and really educating people. My big burning why is initially was to create that freedom for my parents, and get them on board. And my parents, just like a lot of our parents, they hate their job. They've been gritting their teeth for 40 years, wanting to retire. Every year when it comes option for them to retire, they say, well, if I just stay 5 more years, I get this package. And I just want them to be able to break that. So that's how it started. And then once I realized I could really, really impact the lives of even my friends and their family, that really took off for me. So I love seeing the change that I have in people's eyes when I open their eyes to, wow, this is a great investment. And this is a great way that could alter your life and really bring you that freedom.
Okay, cool. Side note, congrats for starting your podcast. I mean, obviously I started my podcast this year too. I like it. At first I wasn't sure how it was going to go, but it's just been amazing. I've been meeting amazing, cool people like yourself. And it's just been, this is a new virtual coffee meeting setup, it seems like.
Yeah, no, I love it. It's a great way to network too. Like you say, hey, you always got to be networking. If anybody's even listening that's thinking of starting a podcast, I would say do it. There's nothing that's going to go wrong. You might be out of $50 mic if you end up hating it. It doesn't really, it's not a big cost. People love being on podcasts. So chances are, if there's a big influencer you really like, there's honestly a good possibility they'll say yes and they'll come on. And it's happened for me. I have a few really high profile guests that are going to get published soon that I was kind of like, wow, I'm surprised they're coming on, because we were in pre-recording when I messaged them. So it's a great way to meet people and expand your own knowledge as well. A lot of what I know about mobile homes or self-storage, I actually learned from a few guests that I've had on the show.
Yeah, it's like, I want to just kind of comment on what you just said. It's like, no, I love it because I'm learning things from podcast guests as well. And selfishly, I get to ask all the questions that I want to ask too. And I'm learning. And it's like, you got to realize that all these big names of folks out there that are established in the space, they would love to be guests and stuff, because they're reaching audience, a new audience that they don't have access to because I know them. You know what I'm saying? Right. So it's just like, so it's a win-win for both sides, which I like.
And I actually heard, one of my mentors too, not a real estate mentor, just more of a business mentor. And he has a couple of podcasts, and I was talking to him about it. And I said, well, what if I can't keep up with the content? And he goes, look, or, what if nobody listens, right? That's the biggest fear when you make content. What if nobody reads my blog? What if nobody listens to this? What if nobody watches my videos? He goes, look, the podcasts that I have, they really don't impact the business. And I said, well, really? And he goes, no, I do them for me. He goes, even if nobody listens, what's the value of sitting down with some of these people who you want to have on the show? What's the value of you walking away with one idea that they gave you and you're like, oh my God, I got to write that down right now. So he goes, yes, getting listeners is great. And that's going to build the podcast, and it'll build, I've gotten quite a few investors from the podcast, and the listeners are good. I get a couple hundred, we're pretty new, but I get a couple hundred per episode. But even if that wasn't the case, the value of just having that guest has tremendous value already. So don't be afraid to do it. Jump in with both feet. Like my advice for everything, just get it done.
Don't be scared. Just do it.
Just do it.
Any big goals that you're working on in the next year, either business or even personal?
Yeah. Business goals for 2022 is I want to take on an additional 3 multifamily transactions of at least 50 units or more. So we'll be adding 150 units at least to our portfolio. Personally, I'm more serious with my, my girlfriend now, and looking to move in together at the end of the year and move our lives and just kind of start something fresh. Probably, like I said earlier, Kansas City or Boise, and just start a new life together. But that's like the personal selfish thing that we're pursuing here.
I love it. I always ask this question for all my guests recently. It's like, and you could answer it any way you like. It's like, what does success mean to you?
Yeah. Success to me means you could do what you want with the people that you want. Again, that time freedom. I know we don't only have a couple minutes here, but I'll actually share a story with you that kind of opened my eyes to this as well. I had a family member who had recently passed away, and it was expected. Very old. It was my grandmother. Lived a great life, was ready to go. Whole family knew it was coming. Happened a little bit quicker than we thought, but everybody flew in, everybody drove in just to say our final goodbyes. And I thought to myself, hey, I have a couple cousins, where are they? And one of my cousins came running in and we said hi. She said, okay, great. And then, we sat down with my grandma for a little bit. And after a couple of minutes, she gets up and she goes, okay, well, my lunch break is over. I got to go. I'll see you guys later. And she still had her, her uniform on from work. And I thought to myself, oh my goodness. And a couple hours later, my grandma had passed. And so I thought to myself, it's crazy that somebody has such control over your time that you only have a 30-minute lunch break to drive here, drive back, and spend with somebody who you'll be ready to see for the last time on this earth. So, and that person makes great money, but so what? So to me, success means you can do what you want with your time, with the people that you want to do it with. So if you want to stay there all day and all week with the person that you love, you can afford to do that. So that truly, truly resonates as success with me.
I like that. Different question. What's your superpower that's contributed, to, everything you accomplished so far in your life?
Yeah, I would say my ability, I have a really, really great ability to speak publicly, personally, privately. I've really studied a lot of communication techniques that have really accelerated my business. The way you talk, the way people portray confidence will really help you, make or break business deals or transactions. Get comfortable with speaking and networking. Read some books on speaking. One of my favorite, I think it's How to Talk to Anyone. Lyle Downs, I think is her name. I actually don't remember, but How to Talk to Anyone. And that's a really good book that's helped me a lot. And just really understanding the psychology of the things that you're saying. I'm also a big believer that you're always in sales, no matter what you're doing. Way of the Wolf has been an amazing book for that. I would say those two books will really change anywhere that you are in your business, or even if you're in sales or not, or you're direct sales or not, you're always going to find out that you're selling something, right? Or even if it's just selling your spouse and where you want to go eat. So really building those sales and communication skills, I would say, is huge. Never stop with those two things.
Cool. Last question, how can somebody get a hold of you?
Yeah, if you want to get a hold of me, you can send me an email. I'll give it to you. It's justin@perpetualwealthcapital.com, and we could put it in the show notes as well. Again, download my free ebook. It's totally free. I spent a lot of time writing it. TheDefinitiveGuidebook.com, definitive guide of building generational wealth and passive cash flow through multifamily real estate. It's free information. Just read up on it, see if it's something for you. If you want to get in touch, there'll be a Calendly link there as well. Schedule a call with me. I love speaking with people. I love talking to anybody, really. And I'd love to talk to you about real estate. I could do it all day. So just reach out to me any way it's comfortable for you, and we can connect.
Awesome. So that's all the time that we have for today. Thank you, Justin, for joining me on this episode. Love your energy. You're very relatable. Love the fact that we have a similar background, and you're also from the Bay Area. So keep on with that hustle and building up the portfolio. And so to my listeners, thank you for checking out this episode of the School of Cash Flow. And remember to leave a podcast review on iTunes, as it helps me attract even more great guests just like Justin. So until next time, live life abundantly.
Thanks.
Thanks for listening to another episode of the School of Cash Flow. We hope you enjoyed our deep dive into all the tips and tricks you can use to help you on your passive investing journey. In the meantime, you may visit www.cashflowschoolpodcast.com for more great episodes. Don't forget to subscribe, rate, review, and share. That's all for this episode, folks. See you next time.